Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 14th of May 2024. So we've just seen the PPI figures from the US, and initially the dollar rallied before selling off. There were downward revisions for the prior reading and sharply, which kept the year-over-year rate kind of in line with expectations. So as soon as the data was released, the euro dollar initially went back below the 200-day moving average before rising to a fresh session high, taking out resistance around 108 area. 108 is very important ahead of US CPI, which is due for tomorrow. And for as long as we don't see a big surprise in CPI, I think the breakout that we're seeing today could lead to some further upward momentum in the days ahead. And now that 108 is broken, by the way, 108 is where we had the bearish trend line that was in place since December. Here we also had the 200-day moving average converging with price support and resistance. So a potential close above this area would be technically bullish, and we could well see some technical follow-up buying in the days ahead for as long as that CPI report does not beat expectations in a massive way tomorrow. We also saw other major currency pairs like the Aussie dollar turn higher after initial weakness. The Aussie has held above this blue line here at 65.80-ish, which was resistance in the past before we broke above it. It has held so far this week and for much of last week as well. So moving forward, 66.50 is now in sight. This level was resistance in the past, and so far we haven't got a daily close above it. I think if we break through that level, that would be a clear bullish development, which could pave the way for significant gains moving forward, potentially towards the December high at 68.70-ish and possibly beyond thereafter. So key level to watch is 66.50 on the upside. On the downside, 65.85-ish is support. A daily close below that would be deemed bearish. But given how price is behaving and the recent structure that's been built here, higher highs and higher lows and whatnot, I think the path of least resistance is clearly to the upside, at least in so far as the short term is concerned. So I wouldn't be surprised if we were to see a bullish breakout in the days ahead. The Kiwi is showing a very similar picture. It is testing resistance here at 60.35, which is the 200-day moving average and the base of the prior breakdown that took place in early April. We've tested this level now a few times, and the selling from that level has been progressively shallower, suggesting perhaps that the Kiwi is about to stage a bullish breakout. So do watch out for that. The Canadian dollar is also showing strength, and it has remained on the front foot following last week's stronger than expected Canadian jobs market data. And we saw this inverted hammer candle that suggested a potential top may be in place. So far, we haven't seen a breakdown of a major support level. For example, this 36.15, 36.20 area, which was the high in December and a few times earlier this year before we saw that big breakout in early April. So that level has been already tested once in early May. Another retest of that level looks to be on the cards today, and if by the end of this week or potentially after the CPI data tomorrow we are trading below this level, I think that would point to a potential top for the dollar CAD, so watch out for that. However, if support holds here and we see a key bullish reversal candle, then that would keep the bulls happy. So I think we need to see some further confirmation here before we turn bearish on the dollar CAD. Now gold remains on the front foot, and I wrote the article on the precious metal yesterday highlighting the potential for a bounce after the metal fell like 1% on the session. But I suggested in the article that the trend remains bullish ever since the metal broke above the resistance trend of this continuation pattern to the upside. And so given that breakout and the consolidation here, which has helped to work off the overbought indicators, for example, if you look at the RSI here, you can see that it is no longer at extreme overbought levels, which it had been the case in early April when the metal was hitting repeated all-time highs every day. So the RSI is no longer overbought. We've got this breakout from a continuation pattern. The trend is clearly bullish with the 200-day moving average, for example, rising. The 21-day exponential is also pointing higher, not to mention the higher highs and higher lows and whatnot. I think the path of least resistance is clearly to the upside, and we just need to see the CPI report tomorrow and if that comes in as expected or slightly weaker, then that should potentially pave the way for gold to make a new record high in the days ahead. So the key levels to watch therefore then 2360, I mentioned this level in my article yesterday. That level is short-term resistance. Above that, 2400 is the next key level of resistance to watch, because gold failed to close above that level on multiple occasions before falling. Above that, there's no other prior reference points until the all-time high that was hit earlier in April at 2431. On the downside, key support area is this shaded blue region between 2320 to 2332-ish. We have held above here for now. This area marks the point of origin of the breakout from this continuation pattern. We also have the 21-day exponential moving average converging there as well. And there could be a few other technical levels that may not be visible on this chart, but it's a very important area. So a potential break below that level, if seen, could be bearish, and that could pave the way for a deeper correction. But we'll cross the bridge if and when we get there. My favorite chart this year has been silver by far, because of the monthly time frame. We saw a big breakout last month from this multi-year consolidation, and for that reason I've turned even more bullish on silver. So I think more gains could be on the way in the weeks and months ahead. In the short term, I was expecting a bullish breakout from this bull flag, which took place last week, and ever since then we've kind of pushed higher, and we've seen shallow pullbacks in the process, suggesting that the part of least resistance remains to the upside. Key resistance previously was at 2806, this level I had highlighted here. This level was the base of the breakdown. We tested this level and didn't even show any reaction on the back of that big breakout on Thursday of last week. With the metal closing above this level has now turned into support, as you can see. The subsequent days on Friday, Monday, and today's session, we have tested this level 3 times, and each time we have bounced from there. So that level is key support to watch, and for as long as it remains intact, the path of least resistance on silver is going to be to the upside. Short-term support now comes in at 28.38, the high from Monday's range. So that level needs to hold now, given today's breakout. The next upside target from here is 29. A break above that could pave the way for a move to 30, which is going to be the next major upside target. And 30, as you can see on this monthly time frame, has been or had been a key area of resistance for several years. And should we get a close above that area, decisive break above it, this could only fuel this silver rally even more. So watch out for that possibility. Now, for more analysis and trade ideas, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care. Bye-bye.